Good morning everyone. This is Sakis Paraskevo, Fundamental Analyst at IronFX Global, bringing you the morning comment for the 8th of October. Chinese stock markets, which have been under heavy selling pressure due to growth concerns and the devaluation of the yuan, rallied a bit after reopening following the break since the end of September. The Shanghai Composite was up around 3%, trying to catch up the recent rally in global equity markets. The positive sentiment could roll into the European markets and keep them elevated. Overnight, Japan's current account surplus rose further in August, beating expectations of a moderate decline. On the other hand, machine orders plunged 5.7% in August from minus 3.7% previously, missing expectations of a 2.3% rise. This was the third successive drop, adding to the recent weak data coming from the country. The reaction on yen, however, was limited as investors remained focused on the much anticipated end of October meeting. As for today's highlights, during the European Day, the spotlight will be the Bank of England monetary policy meeting. With no change in policy expected, the number of dissenting votes is likely to be the key point again. The consensus is that the vote will once again be split 8-1, with Ian McCafferty to maintain his call for a rate rise. Market participants will be eager to see if McCafferty is joined by the formerly hawkish Martin Wheeler or Christine Forbes, who argued that the underlying inflation should start to pick up soon and monetary policy would need to be tightened sooner. Despite the recent hawkish comments, however, market expectations for buoy tightening have been pushed back, with the timing for the first rate hike now splitting from around 9 months in August, meaning the first rate hike to occur around April, to 15 months in October. This explains a bit the recent weakness seen in the British pound. In addition to the Bank of England meeting, the Fed releases the minutes of its September FOMC meeting. At this meeting, the FOMC remained on hold as the market had anticipated, but surprised investors by presenting a more dovish outlook than expected. The committee did discuss the idea of hiking rates at this meeting, but decided not to rate hike because of global factors, as opposed to strong domestic factors. Although the market has shifted expectations of a Fed hike out to March 2016, many Fed officials continue to signal their willingness to raise rates before the end of the year. In the minutes released today, we will have the opportunity to see how close the call for a September lift-off was and if they are likely to start hiking if the global environment calms down. In such case, USD could regain some of its lost momentum. From Canada, we get the housing starts for September. The forecast is for the figure to decline somewhat, which could prove cut negative. In the US, initial jobless claims for the week ended October 3 are coming out. We also have several speakers during today's agenda: ECB Executive Board member Peter Pryett, St. Louis Fed President James Bullard, Minneapolis Fed President Narayana Kocherlakota, San Francisco Fed President John Williams, and the Bank of England Governor Mark Carney speak. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevo, Fundamental Analyst at IronFX Global, wishing you solid trading.